What's up, wealth builders? Welcome back to Build Wealth Now News. I'm your host, Billy Bob, and today we're diving deep into one of the most interesting turnaround stories in e-commerce, Shopify, ticker Shop. Joining me as always is our brilliant market analyst, Sarah. Sarah, Shopify has been on quite a journey. What's the story here?
Thanks, Billy Bob. Great to be here. Shopify is a fascinating case study. They've transitioned from a high-growth, money-losing company to a profitable, cash-generating machine that's now returning capital to shareholders. We're going to walk through 3 key charts from Fiscal.ai that tell this incredible story.
Perfect. For our viewers, we'll be analyzing Shopify's balance sheet strength, per-share metrics, and profitability trends. Let's jump right in. Before we dive into the charts, Sarah, quick refresher. What does Shopify actually do?
Great question. Shopify provides a comprehensive e-commerce platform that lets anyone from solo entrepreneurs to enterprise brands start, grow, and manage their online stores. They make money 2 ways. First, subscription solutions, monthly platform fees, which is about 29% of revenue. Second, merchant solutions, payment processing, shipping, and other transaction-based services, which is the bigger chunk at 71% of revenue.
So they're basically the backbone for millions of online stores?
Exactly. They serve over 5.5 million merchants across 175 plus countries, with about 45% of revenue from the US and 55% international. And here's the key. They're now in what we call phase 5, capital return, meaning they're profitable and actually giving money back to shareholders through a $2 billion share buyback program announced in February 2026.
All right. Let's pull up our first chart from Fiscal.ai. This shows Shopify's current ratio, quick ratio, and debt to equity. Sarah, walk us through what we're seeing here.
Sure. Let's break this down. Current ratio, those green bars, measures if Shopify can pay short-term bills with short-term assets. Quick ratio, the blue bars, is even stricter, excluding inventory. And debt to equity, those tiny orange bars at the bottom, shows how leveraged they are. Now look at the trend. In 2018, the current ratio peaked at 15.4 and quick ratio at 15.2, incredibly strong. But here's what's interesting. They've been intentionally bringing these ratios down while remaining very healthy. The latest numbers show a current ratio of 6.0 and quick ratio of 5.8, which is still excellent.
Wait, why would they want to bring those ratios down? Isn't higher better?
Great question. When ratios are that high, like 15, it means you're sitting on too much cash that's not working for you. Shopify has been deploying capital more efficiently, investing in growth, and now returning capital to shareholders. That's actually a sign of maturity. And look at debt to equity. It's essentially 0. The orange bars are barely visible, hovering around 0.1 or less. This means Shopify is debt-free, which gives them massive flexibility. No interest payments, no debt covenants, just pure financial strength.
So the takeaway for our viewers?
Shopify has a fortress balance sheet. They can weather any storm, invest in opportunities, and return cash to shareholders, all without taking on debt. That's rare and valuable.
This is where it gets really interesting. Chart number 2 shows revenue per share, diluted EPS, operating cash flow per share, and free cash flow per share. Sarah, this chart tells quite a story.
It absolutely does, Billy Bob. This is the profitability transformation story. Let's walk through it. Revenue per share, the green bars, shows incredible growth from just 50 cents per share in 2016 to $8.90 per share in the latest 12 months. That's a 38.8% compound annual growth rate. Even in 2024, revenue per share was $6.80, up from $5.40 in 2023.
That's explosive growth. But what about profitability?
This is the key. Look at diluted EPS, the blue bars. For years, Shopify was losing money per share. But watch what happens. 2020, 26 cents profit per share, first real profitability. 2021, $2.29 per share, huge jump. 2022, minus $2.73 per share, that big blue bar going down. 2023, back to 10 cents per share. 2024, $1.55 per share. Strong recovery. Last 12 months, or LTM, 94 cents per share.
What happened in 2022? That's a massive loss.
Great catch. In 2022, Shopify took a huge one-time charge related to restructuring and investments. They laid off 10% of staff, closed offices, and refocused on core profitability. It was painful, but necessary. And look, they bounced back strong in 2023 and 2024. Now, the real story is in the cash flow, those orange and purple bars. Operating cash flow per share, orange, went from basically $0 to $1.60 per share in the LTM period. Free cash flow per share, purple, is at $1.50 per share LTM.
Why is cash flow so important?
Because cash flow is real. Earnings can be manipulated with accounting tricks, but cash flow is cash in the bank. Shopify is now generating real, sustainable cash. That's what funds their $2 billion buyback program and proves their business model works.
All right, chart number 3. This shows gross profit margin, operating margin, net profit margin, and free cash flow margin. Sarah, margins tell us about efficiency, right?
Exactly. This chart shows Shopify's journey to operational excellence. Let's break it down. Gross profit margin, the green bars, has been remarkably stable around 50%. It was 53.8% in 2016, and it's 48.1% in the latest period. That slight decline is actually normal as they've scaled. They're doing more lower margin payment processing, but the overall margin is still very healthy for a software company.
But the real story is in those other margins, right?
Absolutely. Look at operating margin, the blue bars. This is where the transformation happened. 2016 to 2019, negative operating margins. They were losing money on operations. 2020, first positive at 3.1%. 2021, 5.8%, improving. 2022, minus 14.7%, that restructuring year again. 2023, minus 20.1%, still working through it. 2024, 12.1%, bam, back to strong profitability. LTM, 12.7%, even better.
That's a massive turnaround, from minus 20% to plus 12% in 2 years.
Exactly. Now look at net profit margin, the orange bars. Most years were negative or minimal. 2021 had that weird 63.2% spike. That was from one-time gains, not sustainable. 2022, minus 61.8%, the restructuring charge. 2023, 1.9%, recovery. 2024, 22.7%, strong profitability. LTM, 10.7%, very healthy. And finally, free cash flow margin, the purple bars, was negative or minimal for years. 2024, 18%, excellent. LTM, 17.4%, consistently strong.
So what's the bottom line for our viewers?
Shopify has achieved something rare. They've maintained 30% revenue growth while expanding margins to 12 to 17%. Most companies have to choose between growth or profitability. Shopify is doing both. That's why they're now in phase 5, capital return, and can afford that $2 billion buyback.
All right, Sarah, let's put this all together. Based on our research and these charts, what's the investment case for Shopify?
Great question. Let me give you both sides. The bull case. Profitable growth. 30% revenue growth with 12% plus operating margins is rare and valuable. Fortress balance sheet. Debt-free with $6 billion plus in cash, generating $2 billion in free cash flow. Widening moat. High switching costs. Once merchants build their store on Shopify, it's painful to leave. Plus, their app ecosystem creates network effects. Capital returns. The $2 billion buyback program shows confidence and provides downside support. Growth runways. Business to business, or B2B commerce, grew 96% last year. International expansion, AI-powered tools. The bear case. Valuation. Trading at premium multiples. Any growth slowdown could compress the stock. SMB concentration, heavy reliance on small businesses which are vulnerable in recessions. Competition, WooCommerce is free, Amazon is integrated, and new AI native platforms are emerging. Cyclicality, merchant success depends on consumer spending. A recession could hurt GMV growth.
So what's your take, Sarah?
Shopify has executed a remarkable transformation. They've proven they can grow and be profitable. The financial metrics are strong. debt-free, strong cash flow, expanding margins. The key question for investors: can they maintain 20 to 30% growth while keeping margins at 12 to 17%? If yes, the stock has room to run. If growth slows significantly, the premium valuation could be a problem. What to watch? Free cash flow margin sustainability, currently 17% plus. Execution on the $2 billion buyback. B2B and international growth. Merchant retention during any economic weakness.
For investors watching this, what valuation methods should they use for Shopify?
Since Shopify is in phase 5, capital return, the appropriate metrics are trailing PE ratio. They have consistent earnings now. Price to free cash flow. Their FCF is strong and growing. Reverse DCF to see what growth is priced in. Avoid these. Price to sales, revenue multiples overstate value for profitable companies. Forward P/S, they're past the pure growth stage. The focus should be on earnings quality and cash flow sustainability, not just top-line growth.
Perfect. Any final thoughts for our viewers?
Shopify's story is one of the best execution stories in tech. They proved skeptics wrong by showing they could scale profitably. The charts we showed today tell that story clearly. Chart 1, fortress balance sheet, debt-free. Chart 2, revenue growing 38.8% compounded annual growth rate CAGR, now generating real cash flow. Chart 3, margins expanded from negative to 12 to 17% while maintaining growth. The risk, premium valuation, requires continued execution. The opportunity, a dominant e-commerce platform with widening moat, returning capital to shareholders. For long-term investors who believe in the shift to online commerce, Shopify deserves a spot on your watch list.
Amazing analysis, Sarah. Our viewers now have a complete picture of Shopify's financial transformation.
Key takeaways. Debt-free balance sheet with strong liquidity. Revenue per share grew from 50 cents to $8.90 in 8 years. Transformed from minus 20% operating margins to plus 12 to 17%. Now generating $2 billion in free cash flow and buying back shares.
Sarah, where can our viewers learn more?
All our research sources are in the video description. Shopify's latest 10K filed February 11th, 2026, their Q4 2025 investor materials, and the Fiscal.ai charts we use today. Always do your own due diligence.
Perfect. If you found this analysis helpful, smash that like button, subscribe to Build Wealth Now News, and hit the bell for notifications. Drop a comment below. Are you bullish or bearish on Shopify?
Until next time, keep building that wealth. Peace.
Build Wealth Now News is dedicated to research the businesses behind the stock names. Our research are done with artificial intelligence assistance using the best practices in the industry. Please note that investing carries its own risk, and you should do your own research before committing any stock to your own portfolio. This video is done for educational purpose only.